Hey guys, this is the market update. In this video, very important news if you hold Ethereum leading into the merge. How to play that, how to play the proof of work fork, should you try and claim those tokens if you're getting an airdrop, and some other really important information about that. I also want to get to the Bitcoin price, an absolute disaster today. CPI, the latest inflation figure came out higher than expected, which is completely the opposite to what the market was trading in. So I want to talk about all of that in this video. Timestamps below if you want to skip ahead to that Ethereum section. For right now, we have CPI coming in. It was expected to fall in August, and it's actually up again. Inflation is still going up. This is an absolute disaster, especially for Bitcoin. So at the next Fed meeting, we're going to get a 75 basis points hike, and just the rate of change is still to the upside. The dollar index has been coming off. Risk markets have been going up in expectation of inflation coming down, and it's still going up. This is worse than the market expected, and you can see this right here. I'm going to go to the kind of short-term chart here at 15 minutes, and you can see just this figure right here. Bang, really bad figure for the market, a big sell-off, and we'll have to see how the market reacts over kind of the medium term here. But in my opinion, we've been trading in this range between 20 and 25, and there's absolutely no reason whatsoever why Bitcoin would be making higher highs and trying to break resistance. Absolutely none. Not for the time being, not until maybe the next CPI figure and we see things coming off. In my opinion, the only way CPI is going to be starting to come off a lot now is, you know, the housing market getting even softer, rents and everything like that. Just to go through the CPI figure before we get onto the Ethereum news, what you can see here is food and energy still really way too high. You can see core CPI is also too high as well. The index for all items less food and energy rose 0.6% in August. This is not good news. The market thought things were starting to come down and they aren't. So in my opinion, not bullish for Bitcoin at all. As we know, Bitcoin trades on essentially interest rates and liquidity in the system, and there's nothing to suggest that the Fed is going to change what they're doing in any way. So not great. We traded up in expectation of a soft number. That soft number didn't come. So let's see how things go over the short term. But, you know, again, still bearish. We are hitting the moving averages here, and this is just typical. We might go down to this level right down at about 18 to test those lows once more potentially, or our trader's just going to shrug this off. Obviously, we don't know that, but yeah, a bad number overall. If you want to trade on Bybit, link in description to a $4,000 deposit bonus. If you trade futures, check that link out. If you trade in the spot market, they are giving 0 commission trades across all spot pairs on the platform. So check that link out if you want that bonus as well. But we're going to get to Ethereum here. Chart analysis, and also what you should do in terms of the merge as well. Like we've been saying for a long time, this very long-term head and shoulders that I think it's a head and shoulders playing out. We had a falling wedge, which is actually a bullish pattern considering what's going on. We did break out of that bullishly as well. We're now sitting at a really kind of This isn't either low or high, right? If we were trading up at these highs, then you'd be saying, okay, if the merge goes through, this is definitely a breakout here and maybe a sell-off to test. If we were trading at the lows, this would be a great area just to say, why not have a punt on the merge in terms of, you know, a one-off trade. We're right in the middle of that, which is actually, you know, kind of interesting for a trade here. Now, I don't actually suggest trading or punting around going long or short right now for the merge. It's just going to be way too volatile. And even if you're right, you'll probably get stopped out because this trade's just going to be so volatile. However, something interesting to note here is that the funding rate for trading futures on the Ethereum markets is insane. This is basically like an annualized 20 or 30% rate for going short Ethereum, which is absolutely mental. Now, the reason for this is because a lot of traders have gone very long Ethereum in the spot market, and they're hedging out their position in the futures market going short. The reason why is because they don't actually want to take a directional bet on the merge. They don't want to be either long or short in terms of that. But what they're trying to do, I think, is go long ETH so that they can claim and get a proof of work ETH tokens. And I explained that a little bit. So as we know, Ethereum is moving from proof of work to proof of stake. The proof of stake blockchain is the chain which all major participants are supporting. Binance, Chainlink, all other applications, major apps are all supporting the proof of stake chain, beacon chain, when it merges. However, there will be proof of work chains that split off as well, and they may have some value, and everyone that holds Ethereum in a decentralized wallet like MetaMask or whatever will be able to claim those on those networks. So you have traders here going long ETH in the spot market, short in the futures market, in order to have a long spot position that they can potentially claim free proof of work coins. Hopefully that explains it. This is, in my opinion, just a ridiculous strategy, and I'll go through some of that here, but I think the merge, is going to go well. If it doesn't, expect a massive test of all lows. It's going to absolutely, blow up. But if everything goes well, I would expect, why not just kind of test these highs around 2000 again? I think traders are kind of in the middle right here. So the merge is happening on September 15th, couple of days time. That is going to happen. And for now, everything seems to be going pretty well. We actually have a Twitter thread from Bobby Ong, who created CoinGecko, going through some potential trades around the merge and proof of work coins. So I'll go through that, as you can see here. So to get the ETH proof of work tokens, you have to first hold ETH on a wallet that supports the fork. That basically means hold ETH on the Ethereum mainnet in your MetaMask or in your ledger or something like that. The best would be to have full custody of your ETH on a hardware wallet. For exchanges that support the fork, and there are some, they're not the major exchanges, they're kind of those casinos, right? They are supporting a couple of different proof of work coins, and they might support it if you have Ethereum in there. They might give you a 1-for-1, but that might come months after the merge, and so not a trading opportunity. So if you want to get the proof of work, because what will happen is that all of the coins will be copied and pasted onto the proof of work blockchains, and so you will have a 1-for-1 copy of everything else. Really important here is that all of the assets built on Ethereum, NFTs, USDT, USDC, all of this, they will only be supported by all of the major apps, the proof of stake version of them. So even if you go to a proof of work version of Ethereum, and you can see in a wallet all of these tokens, they are actually worthless because you won't be able to use them to interact with applications. All of the major apps are supporting the proof of stake tokens. So you might think, wow, I've just doubled my money, but that's not actually the case, because you won't be able to withdraw or trade any of those tokens for any actual money on the proof of stake mechanism and in exchanges as well. But what Bobby On says, if you do want to try and play the proof of work merge, and really this is specifically for Ethereum, so if you have ETH tokens on proof of stake right now, when it merges, then you will get ETH proof of work tokens on the proof of work blockchain. That potentially may have some value that you can actually use to send into an exchange and then trade for actual coins like USDT or proof of stake ETH, which is actually supported by all of the apps. So hopefully that makes sense. But as you can see here, if you do want to get proof of work ETH, you basically need to withdraw all of your tokens out and just have them sitting as actual ETH, not wrapped ETH, not staked ETH, not anything like that, just in your wallet. Then a snapshot will be taken, and the proof of work blockchains will basically say all of the assets that you had there will move over to that proof of work blockchain. For me, I think for most people, really this is just a complete and utter waste of time, but it may be possible. How to actually get that proof of work ETH, and if it's worth anything, what you would need to do is use your MetaMask to actually log on to that blockchain. And so you need to find one of the forks, the proof of work forks. There's one here that I think a big miner with, I think it's ETHW right here. So what you'd have to do is go into your MetaMask and then add the network into your MetaMask via details similar as this. You can actually go and look this up online, and the proof of work forks, what their network details would actually be right here, and then you can see what coins you have. What you'd have to do then is get the ETHW or the ETH version and actually send it into an exchange to then trade out for something else of value that you can then withdraw. So I personally believe that these proof of work forks are going to be traded down to near zero. And so for most people, I just don't really think it's worth anything. Now, important here as well, what should you do with your tokens if you've got Ethereum assets that you're using across DeFi? Well, Aave, just as an example here, they've essentially said that nothing needs to happen Even if critical from a high level perspective on the Ethereum network, from our analysis, the merge or the Paris upgrade should affect the Aave system really slightly with no immediate action needed. Aave thinks that this upgrade won't affect any of their markets. They have actually suspended some borrowing of ETH on the ETH mainnet just to make sure there aren't any liquidity issues there, because there's going to be a lot of borrowing and lending of that. So they say that there's nothing really to be worried about in terms of an application perspective. What I would suggest is, if you're worried in any way about, liquidity issues or some sort of, huge sell-off, just in case the merge goes wrong, then there's going to obviously be a massive liquidity event to the downside. Really, really important. If you're lending out assets on Aave, that could mean that there might be liquidations that don't go through, and so potentially a shortfall paying you back if you're lending out US dollar tether, for example. So if you're worried at all, then I would suggest, hey, just take your coins out of DeFi and just let them sit in your wallet for a couple of days until the merge is over and successful, and then you can put them back on. Now, if something really genuinely bad happens with the merge, then it's not going to be good news for any tokens, even if it is in DeFi or not. But if you're specifically worried about some sort of liquidity event or something like that happening, then yeah, it's a couple of days where you're not earning passive income on something like Aave, or maybe in a liquidity pool, just to be sure. But in general, like Aave says, they do not expect anything to be genuinely changing from their end because of the merge. Just some info from Binance here as well in terms of what they're supporting to really kind of drill the point home here, is that all of the major exchanges and major applications are only supporting proof of stake assets. When the merge happens, anything with value that's built on top of Ethereum, like US dollar Tether, US dollar coin, they will only support proof of stake version of those. So all of the USDT and USDC that you may have on a proof of work version that you log into, you won't be able to send that into an exchange to get any value from it. So as you can see here, they are suspending deposits and withdrawals of ETH and all ERC20 tokens during these upgrades. So that will come just before the actual merge right here. As you can see, approximately September 15th, but the actual date is going to change. In case separate chains are formed, what they mean here is that if the proof of stake chain for some reason isn't chosen as the canonical chain for some reason by either network and how it happens, then the proof of work chain will be the canonical chain. That will be the one that actually has to be supported. This is going to be extremely kind of low probability because everyone's supporting the proof of stake chain. But if that does for some reason happen, Binance said that it would use the ETH ticker for the proof of stake chain ETH. Also, the exchange would be crediting the user's accounts with the forked token at a 1-to-1 ratio. So there would be a fork, a proof of work fork with, ETHW or something like that, and that would be a 1-to-1. But the snapshot would be taken before the Paris execution layer will dictate the distribution. ETH proof of work on a fork may have some value if you are to get some, but you would need to send it into an exchange that supports that and then trade it for something else that actually has value that you can withdraw. So for me, it's not really worth it. I think the proof of work versions are going to be sold down to zero almost immediately. Not worth the bother. If you are worried about any of your assets on DeFi, take them out. But everything seems to be going pretty well for the merge. It will be extremely volatile around here. I've got no short-term positions for this. Don't want to trade short-term here. But I think generally if the merge goes well, we would of course see people buying into it and moving it up to those resistance levels. If you want to trade futures on Bybit, get a $4,000 deposit bonus via the link in the description. They're also giving free spot trades across all of their spot pairs at the moment as well. So check that out. I'm James with MoneyZG. Cheers for watching, and I'll see you in the next one.